Stocks get off to a weak start after a big sell-off in the US equities overnight, following a higher-than-expected inflation print. IT and healthcare are the big drags today, even as metals and energy eke out some gains.
Nalco perks up on a jump in profit. Nuvama Wealth gains on a strong growth, but Aurobindo Pharma sulks after US FDA observations on its unit, and a slump in margins hurts MTAR Tech.
Janet Small Finance Bank and Capital Small Finance Bank see weak debut on Dalal Street with listings at a discount to their offer prices. But Rashi Peripherals manages to retain some listing premium today.
And employees of SpiceJet are facing the brunt of its liquidity pressures with delays in salaries, TDS and PF payments by the carrier. The airline's lessors also seem reluctant in further engagement, sources tell CNBC-TV18, even as its fundraising plans face hiccups.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me as always is Pavitra Parekh. So Pavitra, there has been weakness in the market from the beginning of this week.
Yeah.
And today, of course, there is a slow recovery definite over there, but still not going to the levels at which we probably closed from the previous close as well. So let's take a look at the market. Nifty 50, a very slow recovery, a steady recovery is being seen, about 90 points above the mark at which it had opened for trade today, but still 0.25% down in trade. 21,687 levels on Nifty 50. Sensex 2 is in the red with a slow recovery, still down over 200 points. Well, Bank Nifty is the one which is gaining in trade. In the last few minutes of trade, they've gained quite a bit of momentum, 0.3% up. So that's a bright pocket in the market at the moment, and stupendous recovery in the last few minutes of trade as well. Must mark that. Mid-cap universe, that's flattish to negative at the current moment. Really, if I look at the Nifty 50 components and the percentage increases, well, four top companies in terms of percentage gains and gainers on Nifty 50 are from the PSU pack. Remember that we saw the upsurge, then we saw profit booking, but today it's definitely showing a contra call. So BPCL, O&G, SBI, Coal India are some of the top gainers in trade on Nifty 50, and Cipla, Tech Mahindra, Dr. Reddy's, Infi. So IT as well as Pharma is seeing profit taking today. Pavitra.
Oh, absolutely. And, I think the recovery has been quite something, right? I mean, from the lows of the day, the Nifty has recovered more than 150 points. So it's not small by any means that we can see right now. And today, a little bit in contrast to what we had yesterday, you have the small caps which are doing very well. So in terms of the recovery as well. So from the lows of the day, the small cap index is up 2.5%. Mid caps also almost in the green right now, which is why the advanced decline still looks quite all right. By the way, take a look at the banks, currently up 150 points, but, it's a 700-point recovery from the lows of the day. So definitely keep your eye out on what's happening with the banking pack as well, because when we started off trade, it was definitely the weaker link. What else is doing well? You have the entire energy pack, which is holding up well today, right? So names like O&G, Oil India, of course, that's in the big move that we've seen in crude prices, but even names like BP, HP, all of these seeing pretty good moves today. So there are pockets which are managing to hold up quite well, even within, a market which looks a little bit weak and volatile. But let's now talk about some individual stock moves, because it is really in all of these names where you're seeing big swings come through. First up, we have Nalco. This one is surging in trade after reporting what was a good set of third quarter earnings. So Nigel is joining us for a quick roundup and to tell us what really looks so good. Nigel.
Well, Nalco's numbers looked very, very good. It was much better than any estimate on the street, and the kind of beat that we saw on the EBITDA front itself came in at more than 750 crores. I didn't see any estimate even close to 700 crores. So that's telling you the size of beat that we saw out there. Now, a couple of factors played out for Nalco. Alumina and aluminium prices, they'll be determined by global supply demand dynamics. But on the cost side is what they have saved. And that's the reason why the margins have come in at around 23% approximately. The cost of raw materials, cost of power as well has come down drastically. Clearly, there, some part of that captive coal is coming into play, and they're focusing on reducing their power and fuel cost, which has aided these numbers. And normally you see, alumina does well, sometimes aluminium does well, but this time around, both of them have come to the party. So the alumina business, on a sequential basis, you have the EBIT that has doubled. The aluminium business as well has clocked more than 450 crores. So you put them together, both those numbers look very, very good. And the sweetener has come in because they've declared a 2 rupee dividend as well. We'll try to get the management on the channel in the next couple of days. But for the time being, these numbers look good. And the street has given it a thumbs up.
All right, over 9% rise on Nalco, so that metal shining bright. Thanks, Nigel, for that. And cost efficiencies really kicking in that PSU metal maker. Let's now focus on the big Q coming in from the global market, and the US CPI inflation numbers came in hotter than expected for January, spiking Treasury yields and also raising doubts that the Federal Reserve could cut the interest rate several times this year. Lata Venkatesh is right here to delve into the numbers and explain the impact for our market. Lata, tell us.
Well, the number was hotter than expected simply because both the month-on-month and the year-on-year increase was well above what the street was expecting. The month-on-month increase came in at 0.3%. The market was prepared for 0.2%. And year-on-year, the expectation was it would be 2.9. It came in at 3.1. You know, 3 is psychologically important. And the fact that it is lower than the 3.4 in December was unimportant because the market was waiting for a sub 3% number. The big culprit was shelter prices, or what we would normally call home prices. That was up 0.6% on the month and a good 6% year-on-year. So that was a big culprit, not the only one. Other things like eggs and used cars also were entered the fray in terms of higher prices. Food prices were higher. But more important was that core CPI, shorn of food and fuel, the inflation number, that also went up by 0.4% in Jan over December. The market was prepared for 0.3, and year on year it came in 3.9% higher. The market was prepared for 3.7%. So as a consequence, immediately after the numbers hit, the percentage of people who were expecting a rate cut in May dropped sharply from 64% to 36% on the CME Fed Watch tool. The market is now veering around also to the view that the earlier 6 cuts that were expected, rate cuts that were expected in the current year, in calendar 2024, would be whittled down to 3. Now, that was the number which was anyway thrown up by the dot plot of the Federal Reserve. So the market is now veering around to the view that it will only be 3, but not everyone is over there. There are a lot of people who still believe in 4 and 5 rate cuts in the current year. But what is definitely unanimous is that the rate cut has, not unanimous, majority is that the rate cut expectation start has shifted to June from the May expectation earlier. The impact was immediately seen, of course, on the 10-year yield across the yield curve. But the 10-year being the benchmark cost of capital for the world, that one went up from about 4.18 to 4.32 and then ended up at 4.31. The dollar index, which was closer to 104, jumped up almost to 105, 104.81. I'll come to the PPI number in a minute. Let's look at the Indian indexes. The 10-year bond yield rose to a high of 7.14 and is now settling at 7.1213. But the important point about the 7.13 is that all the gains from that very clement Indian budget got wiped out. You know, in the budget, we were expecting a 5.4% fiscal deficit. It came at 5.1. Borrowing program amount was much lower than what the street was expecting. But all those positives were erased by this one number, and the yields are back to the pre-budget levels. Rupee has weakened a bit, not a great deal. It's about 10 pies cheaper. The rupee, that is, it costs 83.10 to buy the rupee. It was stocks that really took it on the chin, and not just Indian stocks. All emerging market stocks took it on the chin in early morning trade for the simple reason that if you can get risk-free return from the US at 4.32, then you perhaps will risk less money in emerging markets. But, and now is the important point, the PPI numbers should come up now for you. The message from the CPI number is also that the US economy is very strong. That was exactly what we got even from the jobs data in January, that the economy is very strong. So you are seeing a bottom fishing happening, and the market will now wait for the PPI number on February 16, that's Friday, and that feeds into the PCE. The Fed follows the CPI, which comes from the personal consumption expenditure, or the PCE on Feb 29. So until then, we can actually expect a rebound.
All right, Lata, thanks a lot for taking us through all of those details and also the impact in terms of everything that we got after the US CPI number did come through hotter than expected. But moving on now, let's also talk about Paytm because that stock is down again, almost 8% in trade. And sources tell CNBC-TV18 that investigative agencies have initiated preliminary inquiries against Paytm Payments Bank. So Timsy is here with the details on this one. Timsy, what are you picking up?
Well, yes, as you rightly mentioned, sources have indicated to CNBC-TV18 that investigative agencies, including the Enforcement Directorate, they have initiated a preliminary inquiry against Paytm Payments Bank. Paytm spokesperson has told CNBC-TV18, and I quote, in reference to inquiries and investigations by the Enforcement Directorate and other regulatory authorities, we would like to refer you to our clarification issued on 5th of February on matters pertaining to 197 Communications Limited and its associate, Paytm Payments Bank Limited. We may be asked to furnish information and explanations by different regulatory and law enforcement authorities, including ED, and we have always complied with the requirements dutifully by furnishing the requisite information and explanation, end of quote. Just to give a backdrop to our viewers, just to remind them that RBI on 31st Jan had prohibited Paytm Payments Bank from accepting deposits and top-ups in customer accounts, prepaid instruments, wallets, and FASTags effective from February 29, 2024. So we'll have to wait and watch for what happens on February 29. And yes, what is it that the preliminary inquiries indicate to these enforcement agencies, whether they go ahead to register a case formally against Paytm Payments Bank? That is something that we'll have to closely watch out for, because as of now, no case has been registered. These are only initial level inquiries to look into whether there is any possible violation of any particular laws that are there for this particular agency. Back to you.
Thanks so much, Timsy, for getting us that important piece of information. The stock of Paytm is down over 9% in trade, so the woes really continue. No let up in sight at the moment. Another stock that we are focusing on and is on our radar today is Aurobindo Pharma. Now, the stock is down and under pressure after the US FDA issues observations on its unit. Ekta Batra is right here to tell us more about it. Ekta.
Thanks for that. Well, yes, Aurobindo is in focus because their Eugia Specialties Unit 3 has received 9 observations from the US FDA in an inspection which ended on the 2nd of Feb. Now, the details of these observations have become public, and the street is a bit concerned in terms of what could happen to this particular facility going forward based on these observations. Now, most of these observations are related to aseptic process, documentation, hygiene issues have been pointed out. It's a 26-page Form 483 with 3 inspectors having inspected the plant, and many of the observations have subdivisions in terms of the details of the observations. So it's quite a detailed Form 483 which has been issued. Now, the street already had a whiff of it, and the company did clarify on a lot of issues with regards to it. So I'll just take you through. One, the importance. It's 40% of total sales of the Eugia business, which is basically the specialty and the injectables business. They are going to be submitting a response on the Eugia 3 unit by 26th of Feb. As a cautionary step, they've already stopped manufacturing of at the Eugia 3 site. They expect the non-aseptic line to initiate in a few weeks, and then the other lines to probably in a month. They could see an impact of $20 million in Q4 due to Eugia 3. The company was not expecting major approvals in FY 25-26 from this particular facility. And overall, the company is still confident of maintaining their 20% guidance. They are probably going to see growth mainly from Revlimid generic when you talk about Eugia. They have $35 to $40 million in terms of sales estimated in terms of new launches from FY 25, FY 26, and 50% is expected to come from Eugia Unit 3. Now, the street is not convinced, as you can see with the stock. Elara said that, if in case there is an import alert, which is the worst case scenario, then there could have been a 15% impact on the consolidated EBITDA plus EBITDA on their estimates. Now, remember that the stock has corrected 16% itself from the day the news came out, or there was a whiff of the news. And the FY 25 PE is now down to around 14 to 15 times versus 17 times. We'll wait by to see what the response is by Aurobindo and what the the detail will be from the US FDA. Within 3 months, they'll have to classify the plant, and hence the next couple of weeks and maybe the next 2 months odd would be very critical for this facility.
All right, Ekta, thanks a lot for taking us through all of those details. That is Aurobindo Pharma still down around 3.8% in trade right now. But we are going to get into a short break. On the other side, we're going to bring you the latest updates on the farmers' Delhi Chalo protest. So stay tuned. We'll be back in 2. Hey guys, welcome back. You're still tuned into Business Lunch. Now let's bring you some updates from the aviation space. In view of the severe air traffic congestion at the Mumbai airport, the Ministry of Civil Aviation has instructed the airport authorities to reduce the number of scheduled flights and limit the movement of business jets during peak hours. So the Airport Authority of India has issued directives to the airport operator in the form of notice to airmen on the 2nd of January 2024. And these directives really restrict the air traffic movement during periods of high intensity runway operations. General aviation aircraft operations have also been restricted. This is between 8 a.m. and 11 a.m. And the Mumbai International Airport is expected to take immediate action on these directives and ensure that all airlines are on board with the prescribed restrictions. So that's an important update on the aviation space.
That's right. It affects all of us and all the commuters. All right, let's now also get you the latest on an important national development for the day and the farmers' protests. Thousands of farmers continue their march towards the national capital as they demand for new laws regarding the minimum support prices, MSP, for the crops. Danish, our colleague, is joining in now to explain the security situation on the ground and gives us the full picture. Tell us, Danish.
Right now I am present at Tikri border, and this border connects Delhi to Haryana through National Highway number 10. And this is the same location where 4 years back, when the main protest happened, this area was full of tents, and we saw there were farmers in thousands and thousand numbers. But right now I'm standing at the side of the Delhi border, and as you can see behind me, there are security preparations that are done. There are a lot of concrete blocks that have been kept right in the middle of the road with a lot of barbed wires. And similarly, on the other side, if you see, you can see there is a layer of rapid action force personnel over here. And as far as the total security preparations are concerned, Delhi police as well as the Haryana police, both of them are proactively ensuring that there is a lot of security presence at the borders. On the Delhi side, we can see that the Delhi police, along with rapid action force and CRPF, are deployed in multiple layers, and there are at least 8 to 10 companies of each force that are present here. And on the other side, that is on the Haryana side, the Haryana police, the rapid action force and the ITBP are deployed over there, and even those companies are between 8 to 10, and they're keeping a close watch on the border. As of now, the situation here is completely normal, as the farmers haven't tried to breach this location as of now. But both forces from both the states are keeping a close vigil on through CCTV cameras as well as through drones. But if we look at the human side of this, as I was about to enter to report on this area, I saw that there was a school, and teachers were quite unhappy with the situation that is here right now, because tomorrow there is a Haryana board exam, and the teachers were quite skeptical to understand that how the students would be able to visit the school to give the board exams. And similarly, I also saw that a hospital is also right here in the center, and certain old patients were made to walk from their wheelchair to cross the road. So all in all, if we see, the general public is facing a lot of issues as there are severe diversions everywhere. But as far as security preparations are concerned, the security preparations are done in a good way, so that even if the farmers try to enter this area, they will have to go through multiple layers in order to enter Delhi.
All right, Danish, thanks a lot for getting us all of the details in terms of the farmers' Delhi Chalo protest and, where the preparedness really stands. We do need to get into a short break, but on the other side, we're going to track a whole host of international developments. We'll also get you the latest from the tensions in West Asia. Stay tuned.
In some global news today and to the latest updates from West Asia conflict, well, amid growing concerns over Israel's assault on Gaza Strip's southernmost city of Rafah, reports say that Israel has drawn plans to evacuate Rafah civilians to 15 sites containing 25,000 tents each across Gaza. Meanwhile, Israel delegation returns from Cairo after the hostage release talks involving the US, Egypt and Qatar ended without a breakthrough. However, the officials say that the negotiations were positive and the talks will continue for 3 more days.
All right, that is the latest from the conflict in West Asia. But with that, we're going to have to wind down on this edition of Business Lunch. We have Mid-Cap Radar coming up after this short break.